Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin. I'm going to be taking you through the next hour, so I'll just get rid of that. There we go. I'm going to be taking you through the next hour as we look at things that have just happened in the market, where we are at present, and we'll be looking ahead as well, just so we anchor ourselves into present market sentiment. Okay, without further ado, just as people are coming in, I will start reading through the disclaimer just to make it aware that during this workshop, what we're really looking at is, it's about education, it's about finding out how I, as a professional trader, go about looking at the markets. So you guys can start to learn, what sort of things should I be looking for? How do I decide which currency pairs to trade? How do I look at, potential places to enter and exit? What factors should I consider? Just important that I say this is not trading advice. So this isn't a signal service where I'm offering, a number of signals to be blindly followed. Instead, this is, as we look at different, aspects of the market, we'll look at different currency pairs. The whole thinking is all about education. So I always make that clear at the start of every session, and it's important really because the market is dynamic, it's changing, and you only have to have one event to change an outlook for a currency pair. So that's important that I say that from the very get-go. Just want to say hello to folks coming in. Hi Aaron, Diep, Julia, Lazio, Mladen, Olafemi, welcome back. Van, good to have you back, guys. Can you just let me know that you can hear me okay? If someone could just type in the question panel and just let me know that I can be heard, that would be great. I'll have a little check. Everything seems to be working well on my microphone. And let's just check I'm sharing the right screen. Yeah, and I'm sharing the right screen. So that's excellent, we're all good to go. Excellent. So in the session ahead, what we're going to do is, if you look at the handout button on your GoToWebinar panel, you should have a GoToWebinar control panel that you're viewing this through. And if you look under the heading handouts, you'll see there's a handout for this session. I'm going to open it here for myself and then drag it across. This is the handout session. That looks like this when you open that attachment, and you can see that it covers 5 key areas. Okay, the 5 key areas that it covers is to look back, look forward, look at the charts, look at your risk, look at the outcome of your trade. And I've kind of tried to put it onto one sheet of A4, very simple. I've tried to summarize, the key aspects of a trade that I look at now. It's become, second nature to me. But I've tried to put it down into a sheet of A4 so you guys can print it out, can put it by the side of your computer, and you can use it as a guide to follow through. And on the workshops each week, we go through this guide. So I'm going to be going through exactly this guide today. We'll be looking back, looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. They're really key points. And you can see the sub headings, which I'll refer to as we go through today. I'll just put that aside onto one of my other screens. There we go. The special topic today is how to find places of value for trading. One of the key aspects of trading is finding a value place to enter. We don't want to, even when we correctly identified a currency pair, a pressure that's likely to be exerted on it, we don't want to just jump in at any point. Instead, we want to find places of value for trading. So we'll just be looking at that concept really. And I think once you grasp that concept of value trading, it does help with your entries and where you want to be looking to enter. The handout for the session you should have now, so make sure that that's given to you. Then we have emailing suggestions. If there's any topics that you would really like covered, please do email them to me here, giles.coughlin@hycm.com. I look at this account, so if there's anything in particular that you want covered or not quite understanding in the markets, it can be anything. It can be, what's happening with a currency pair, what's a central bank doing, down to technical analysis. Just email me that there, and maybe I can cover it during the special topic. So this is a special topic that I'm covering today: how to find places of value for trading. If you would like a special topic covered, you can just email me there and I can look at that for you. So if you'd like to turn to your handout, please, and we'll be looking at the first section, which is looking back. Now, if you look at the looking back section of your handout, you'll see there's 3 questions that I'm really asking us to find out. And the first thing we want to find out is we want to find what recent sentiment is by reading up on the last 2 sessions of market activity. So we're trying to see which currency pairs are being moved at the moment and what's the reason for that. So when we say sentiment, what we really mean by sentiment is mood. People have moods, and in the same way that people have moods, the market has moods. So we want to identify what the recent and the current mood of the market is, and the only way we can do that is by reading up on the last 2 sessions of market activity. Now, when I say a session of market activity, the FX trading day is split into 3 sessions. You have the Asian session, the European session, and the American session. Those 3 sessions make up a trading day. So when I come to my desk at the start of the European session, I'm wanting to read back and look at the Asian session and the US session, because I can see what's been happening in the market while I've been away from it. So whenever you come to open your trading terminal, the first thing you want to do is look at what the recent sentiment is by reading up on the last 2 sessions of market activity. And then once you've done that, there's going to be a whole host of information, and you have to prioritize what the key market sentiment is. So identify key market sentiment to see what is the big news, what is the market moving news amongst all the different data points. You've got to identify the key market sentiment. That can seem complicated at first, but it becomes quite simple, and all you have to do is read up a couple of market wraps. Now, a market wrap is just a summary of what's been happening in the last session, and you've only got to read 2 or 3 of those, and you will quickly identify what the key market sentiment is. And the key markets, it could be something like a central bank has done something in the last session, a central banker has said something, there's been a key data point, there's been a surprise data point. These are all the sort of things that move the currencies in a strong direction. And then, when I just say, can you summarize that sentiment in a sentence or 2? The whole idea here is just to not just to read the sentiment, but really anchor it in your mind. What is the key sentiment? What is driving the currency markets at the moment? And then once you've done that, you see, you're going to be using that information for point 3, looking at the charts. And that's when you want to develop a bias for certain currencies based on your sentiment analysis. Okay, so once you identify the key mood, you then want to develop a bias, which currencies are going to be moving in opposite directions. And we're always looking to pair up a weak and a strong currency. That is the ideal. We want to be trading a weak and a strong currency against each other, because that's when they're most likely to move in opposite directions. Okay, that's the general thinking. So what we're going to do now in the workshop is we're going to go through that. So I'm going to slow down the process, as it were, to show you how we go about doing these different sections. So first of all, we're going to be looking back, and what we want to do there is we want to look back at the recent market events. So obviously I'm coming to my screen at the start of the European session. So let's look back, and the first thing we want to look back is to yesterday's American session. Okay, and the key mood in yesterday's American session was with the US dollar. Okay, and we saw some dollar strength coming into the market. That's from an old title. And one key US data release was the US April JOLTS job openings. Now, one of the key things to understand with this whole fundamental analysis and way of understanding the market is you only really understand a change in the market when you understand what the base level is. So in other words, before you can recognize a change, you have to know what the base level is. You have to see how things should be. So that's one of the hardest skills at first with fundamental analysis, is really tuning in to all the different market narratives that are going on. Now, once you've tuned into them, it's relatively easy to spot the change. Okay, so let me give you an example. If, for instance, you knew that a central bank was keeping interest rates on hold and said they were intending to keep interest rates on hold for all of 2019. Say there was a couple of surprise data points and then a central banker said, well, we're going to be increasing interest rates now. You know, that's most likely what we'll do at our next central bank meeting. Then all of a sudden you see the change and you'd see the strong reaction in the currency. So that's what the skill you need to develop, is to recognize the base level and recognize the change. And here's like the beginning of an example here. I'll show you with the US dollar. Now, US dollar, start of the year, the Federal Reserve moved from a hiking bias to a neutral bias. In other words, they're saying we're going to be holding our rates neutral. We're not going to be looking to raise or cut rates. We're just going to be data dependent. Now, there's been growing concerns about the Federal Reserve, you know, the low inflation, and the concern is that the Federal Reserve is going to be needing to cut interest rates. Global growth is slowing. There's expectations that the US stock market will eventually be hit by the slowing global growth, and the general movement is felt that the Federal Reserve will have to respond by cutting interest rates, and the probability of a US interest rate cut for July is now seen by the markets at around 80%. Okay, so we had the non-farm payroll release out last Friday. It was a very poor reading. Now, that poor reading has increased the likelihood of a Federal Reserve rate cut. So this week, the US data points are going to be viewed very carefully, because the market's wanting to think, well, is that right? Are we correct to be pricing in a rate cut in July for the Federal Reserve? So one key US data release yesterday was the JOLTS job openings. And this is when we saw US April JOLTS job openings maintain steady at 7,449 versus 7,496 thousand as expected. Now, that's a very strong reading, and you can see that you know, wages and labor has been very good for the US market, and that's been underpinning the US labor market. Now, the reason JOLTS job openings are good news is because if you have jobs that are opened, it's in other words that companies are struggling to fill those jobs. So with all those jobs open, it means there's a really good labor market, because companies aren't able to fill all the jobs. So there's room for expansion, there's room for growth, there's more room for more workers to join in. So, you know, if employers are struggling to fill jobs, it's a good news that the US jobs market is doing very well. And of course, if employers are struggling to fill jobs, they're going to offer more money for those roles. So it's likely to be an increase in wages as well. So that was good news for the US dollar yesterday. There was some strength of the US dollar based on the Mexican and US tariffs that were expected to go into place weren't executed, so that saw some dollar strength, and this helped to underpin the dollar as well. This was a good, a good solid data point release for the US April jobs opening. And remember as well the current concern over weak jobs data from the last non-farm payroll on last Friday. So that's showing that the jobs market is good. If that had been a full, sub 7,000, you can see that would have raised more concerns out of US jobs markets. So again, you're putting these little pieces of jigsaws together, trying to work out the picture as it's materializing in real time, and that was the jobs data out from yesterday. So okay, that saw some dollar strength, but that wasn't to do with this jobs data point. Really, that was mainly to do with the US-Mexico trade tariffs being reduced. So that was the key risk on bias that came into the market, and we expected that. As soon as Trump tweeted on Friday, we knew that the market open, we'd see a gap open in US dollar, Japanese yen, which it did. Okay, so it was dollar buying yesterday. The US dollar at the end of the American session was the strongest currency of the majors. However, some of the earlier European session gains were erased, so there was a big boost in the dollar that pared back a little bit. And the ongoing concern is still that the Federal Reserve is going to cut rates in July. So we're seeing these twin narratives. There was relief over the US and Mexico trade tariffs not coming into place. So we saw the US dollar strengthen on that optimism. But in the back of your mind, we realized that the bias is the Federal Reserve is probably going to be cutting rates in July. That's the expectations. So we've got to kind of hold these two different narratives in our head. The S&P closed up nearly 0.5%, Dow closed up for 0.30%, Nasdaq closed up a full percentage point yesterday, and the US stocks themselves, they were supported by the strengthening dollar on the back of the Mexican tariffs not coming into place. But it's got a fragile market environment. There's a lot of risk still in the marketplace, particularly between the US and China and those trade deals. Even the US-Mexican relationship is not 100% secure. So even that itself means there's plenty of risk in the market. But that was the reaction on Monday. Well, Trump made a surprise call to a financial broadcaster in the US, CNBC, and we had an interesting, number of headlines from him. He was saying in his typical, bold manner, President Trump was saying China's getting absolutely devastated. Saying China is going to make a deal because they have to make a deal. Companies are leaving China and going elsewhere, including to the US. He says tariffs are a beautiful thing. Okay, but interestingly, what President Trump says is we talked about Mexico deal for months, but we couldn't get there until the tariffs. Okay, so in other words, he's saying that he used the threat of tariffs to get Mexico to do a deal. It sounds like he's doing exactly the same thing with China. Okay, he says Mexico took 30% of our automobile companies. They would all move back if we put on tariffs. As soon as I put tariffs on the table, it was done. Okay, so from my standpoint, tariffs are a no-brainer. So what President Trump is revealing there is President Trump uses tariffs to force deals. So that tells you that he's going to use tariffs more against China. More tariffs are coming because it's part of President Trump's negotiating tactic. Whether it's right, whether it's wrong, that's not the comment. The comment is that he's telling us that he's using them. So that's something to be aware of. The threat of further tariffs will result in yen strength, Swiss franc strength. So just be aware of that in this coming week. We haven't got rid of this, we haven't got rid of risk, even though the market started the week quite happy, seeing some US dollar strength on the back of the US-Mexican tariffs not coming into place. It still leaves China, and obviously China's GDP is about 15% of the world's GDP at 12 trillion. So there is an extremely high risk. President Trump's told us that he will be using tariffs in the future again. He also was criticizing the Federal Reserve. Now, if there's one thing President Trump wants, is he really wants low interest rates. So he gets very annoyed when the Federal Reserve raises interest rates. So that's why he's saying our Fed is very, very disruptive to us. He says the tariffs are putting us at tremendous advantage. China devalues its currency, something has to be done. China currency moves nullify tariffs to some extent. So that is the weakening of the yuan against the US dollar. That's been used to offset some of the export increased costs for China. The Federal Reserve raised interest rates far too tightly. So, watch for this, because President Trump really wants the Federal Reserve to not raise interest rates. He'd be delighted if they cut interest rates. So the pressure is on the Fed to cut interest rates. So that's just interesting going forward, that if the Fed want to cut interest rates, President Trump he's only going to be a cheerleader for them. He says, we've got everything we wanted from Mexico. If China doesn't come to the G20, tariffs will go on immediately, but I think we're scheduled for a meeting. Expecting to meet President Xi at G20. Says no deal with China would mean more tariffs. So there you can see explicitly what President Trump is doing. China wants to make a deal much more than I want to. A lot of people think Q1 GDP was 1% stronger because of tariffs, and Huawei could be part of US trade deal with China. So President Trump was saying a lot of things in yesterday's American session, and the key thing to really take away is Trump wants low interest rates. Trump is going to keep using tariffs against China, so therefore more tariffs are to come. So look out for those. As soon as more tariffs are announced, we're going to see yen strength, Swiss franc strength, and potentially that can be used to take advantage to find a strong currency pair. Okay, yesterday's American session, we had the Bank of England Saunders on UK rates. He was, we've had some mixed kind of messages from some monetary policy committee members on the Bank of England's board. And we'll go through these. But one of the things Saunders was saying, he was saying, any rate hikes will be limited, gradual. Bank of England doesn't need to wait for Brexit resolution to act. So Bank of England Saunders was sort of giving, hawkish comments for the pound, indicating that, Britain, might hike interest rates. It's that kind of language, and he's not trying to counter some of the market expectations that the Bank of England will not hike interest rates and are more likely to cut interest rates. Brexit uncertainty has weighed very heavily on the British sentiment, and the pound is really heavily weighed down by that. For me, the pound still remains a sell on rallies, despite the hawkish comments and despite the good wage growth data that we had out today. I think the bigger picture is still Brexit uncertainty, and it's still that until Brexit sentiment is solved, the market's not really going to know or have any idea of how to price in a next move for the pound. The next rate meeting for the UK is June the 20th, so in about 9 days we'll have the Bank of England speaking and giving us their rate meeting. Nothing's expected to change, and until we got Brexit uncertainty out of the way, I just can't see how anything can change. But Saunders was wanting to put a little bit of doubt into the market, saying that we may be hiking interest rates. We'll see. I don't find that very compelling or convincing at the moment, but it's something to bear in mind. We also had, that's from last week. We also had President Trump says he thinks that he'll be meeting President Xi at the G20 meeting. They're scheduled to talk. President Trump was also talking about French wine tariffs, as French wines are allowed into the US virtually tariff-free. And there was something in the Chinese press stating that the US Air Force is preparing to run through aggressor drills to simulate combat with China's fighter jets, while it was reported that China and Russia are expected to form an alliance to fend off the US. So there's just some, indication of how the Chinese are feeling. The general narrative in China that's coming out of some of the state newspapers is that President Trump doesn't want a fair deal. He's trying to sort of crush the Chinese people. So the Chinese are being rallied under a sort of a patriotic flag to resist the US tariffs. So I think with some fair, cause really, the threat of the tariffs and the actual tariffs going on to the Chinese people are very high, and it's going to affect a lot of people's lives. So the Chinese are feeling quite harassed by President Trump, and obviously this kind of report tells you, the level of harassment they're feeling. We want the US are preparing combat drills with China's fighter jets, and China and Russia are expected to form an alliance to fend off the US. That's what a geopolitical event to keep an eye on. There was a unexpected move by the People's Bank of China last night over the Asian session. They set the reference rate around 150 basis points stronger than was otherwise expected. They had expected to hit a mid-rate meeting at mid-rate setting of 6.9080 on the US dollar Chinese yuan, but it was set at 6.8930. And this reaction was a fall in US dollar Chinese yuan away from the 7 level. So you can see that with the rate set 150 basis points stronger, the US dollar Chinese yuan fell heavily on the fixing, and Australia Japanese yen pair moved higher on the announcement, as did the US dollar yen and the Australian US dollar pair, because a weaker yuan is seen as negative for the Australian dollar. So a stronger yuan is positive for the Australian dollar. And this is always to do with China being Australia's biggest export partner. Around 30% of Australia's GDP is made out of exports with China. So a big event for China is also a big event for Australia, and many traders will trade the Australian dollar as a proxy for Chinese data points. Now, coming into the European session, we had ECB's Rehn. He was saying that the central bank could strengthen forward guidance, rates could be cut, and could relaunch quantitative easing if needed. So he's sort of backpedaling here a little bit from the forward guidance from the ECB last week. And he's just, making it clear that the ECB are essentially, data dependent. So if we keep getting further weakness out of the Eurozone economy, then we can see the central bank moving towards rate cuts. Now, people are pricing in, the market is pricing in a rate cut coming from the ECB. So that's just a story to be aware of. And particularly looking at inflation data, manufacturing data, these are the key kind of influences on the euro at the moment. Now, in the European session, one of the surprise reading was UK April average weekly earnings. They were up at plus 3.1% versus plus 3% on 3 months over the year expected. So that was a good reading for the weekly earnings. The prior was revised to plus 3.3%. Average weekly earnings excluding bonus was plus 3.4% versus 3.2% expected. Unemployment rate was flat as expected. Employment change 32,000 versus 4,000 jobs expected. So all in all, a good data point. The jobless claims changed. Jobless claims were down. Prior was revised down. It's good news. The claimant count rate was fractionally up. Taken as a whole, a very strong data point. The pound rallied on that data. And you can see here that earnings have been good in the UK. And this has been one of the strong data points for the UK through all the Brexit difficulties, has been the average weekly earnings. The Labour data has been very good for the UK. So that's just something to balance up against the poor GDP numbers we saw yesterday. I will touch on that in a minute. The Bank of England, we had a couple of Bank of England speakers out. We had Bank of England Saunders reiterated the Bank of England may raise rates faster than the curve implies if Brexit is smooth. So this was, again, Saunders speaking again this morning, saying, the Bank of England may raise rates faster than the curve implies. In other words, he's saying that it's possible we raise rates quicker than the market's expecting, But then he said, but this is if Brexit is smooth, okay? And of course, no one knows what's going to happen with Brexit. So this sentence is really just speculation. We also had Bank of England's Vlade, and he said that data since May has been disappointing. Downside risks have intensified. So we've got a slightly different perspective here. And, it says data since May has been disappointing. Well, the inflation and wages have been good, but the GDP data was a bad miss yesterday. So it's been a mix of data out of the UK. And the GDP data yesterday was a bad miss, but a lot of that was skewed by manufacturing car production in the UK because of the Brexit deadline that was due to be over. It's due to be 31st of March. What happened is the scheduled shutdown in car manufacturing was moved as a result of the Brexit deadline. So that impacted the GDP data quite heavily. So although the GDP data was a bad miss, there were some reasons for it. So the jury's still out really if how bad GDP is, but definitely exports were down and imports were down. So there was some bad data point, but a lot of that was affected by car manufacturing. Okay, Bank of England Saunders again speaking. Bank of England may raise rates faster. His certainty of a worse Brexit outcome is not better than currency uncertainty. Brexit uncertainty is affecting the pound. Says no personal view on optimal level of pound. So again, saying nothing new there really. All he's really saying is that we don't know exactly where we are until Brexit, and that is exactly the same situation we've been in for a time. But remember the pound. So the pound's rallied on the back of, this is something you've got to put these pictures together. So the pound rallies with this good news here, but actually, does this fundamentally change anything? No. So often rallies can be good opportunities to sell, and the pound remains a sell for me at the moment with all the Brexit uncertainty going on. But often when you're trading, you have to get these different narratives together. So you've got to see short-term sentiment versus the longer-term fundamentals. So a short-term sentiment can be bullish, but that doesn't always mean you want to buy with it. Sometimes you're thinking, well, the short-term sentiment is bullish, which means I've just got a better price to sell from. That's sometimes the kind of thing that you'd be looking at there, and that's a key thing to be aware of. Okay, those kinds of things. Oh, okay. Let me just get the right thing. Well, what we'll do is we'll have a quick look at the pound US dollar chart. Let me just get rid of this. Just get rid of that screen there. And let me move that. Let's see. Yes, okay. That's it. Okay, so let's look at the pound US dollar pair. I'm just going to quickly put a position on there. Just bear with me. Yeah, okay. Please excuse me. I'm just having to adjust an order on a different chart. I'll just be with you in 2 shakes of a donkey's tail. It won't take long at all. Right. Yeah. Okay, yeah, great. So let's look at the pound US dollar pair. So we'll see exactly what I'm talking about there. Let's just call it up there. So looking at the pound US dollar pair. So we're seeing this rally in the pound on this stronger news. And this rally has been with the average weekly earnings. But looking at the daily chart, we can see that price is just sitting underneath that 1.2750 level, which is that key support level here. and here, and here, and here. So you see that's a key level. And with price staying below, as long as price stays below there, that is definitely more bearish. Looking at the some trend lines here, we can see that there's a trend, price is testing up towards the underside of that trend line. So you can see the price kind of stalled at a key point here. So this is kind of, you know, a good example of what I'm talking about. You've got the price moving up, stalling, but then as soon as it tests the underside of this trend line, you know, if it stays below here, it's more bearish. Get and stay above, it's more bullish. It's a simple trend line, but it can be very helpful just to see what the current market direction is. And what we're looking at is the price at the moment is staying underneath that key level there, and you know, a big bullish engulfing bar off the underside of that trend line. So we'll have to see where price goes from there. But you can see that sellers use that test of that level as an opportunity for short. So I'm not trading that now. I'm certainly not suggesting you guys trade it. It's more just seeing that the technicals are working on that and how the sentiment was positive, but the longer term fundamentals are more negative. Now, it doesn't mean that price can't shoot through that level. Of course it can, but then you're looking again at these high levels up here, you know, 1.2860. We've got the underside of that key support level there, and we're starting to get resistance from the 150 exponential moving average on the downside. So there, you know, upside targets. Downside, we've got 1.250. So for now, you know, near-term risk for this session is just above these highs here. Okay, that's the key area where risk can be defined and limited, and that would be for a move down here. Obviously, get above, stay above, then you're looking for a retest of that area to stay above to be bullish. But that is your line in the sand for now. That's your key kind of directional bias and guide on a technical basis. Okay, Bank of England. We've done the Bank of England Saunders. We've gone through Brexit being the main risk for the Bank of England. There was also some Norwegian inflation data. Now that was unexpected. It came in at 2.5% versus 2.9% expected. Now this saw a quick fall in the Norwegian krona. You can see here's the euro Norwegian krone. The inflation data was quite a big miss. You can see this is the general data point. So that's quite a big miss. It's a big fall from last month's 2.9%, and is expected to remain at 2.9% this data point as well. So that's a bad miss for May. Now, the Norwegian Central Bank is currently expected to hike interest rates, but Norwegian's economy is very tightly correlated with oil prices, and oil prices have been falling recently on slower global growth and uncertainty over the future path of OPEC rate cuts. So we have seen lower oil prices. However, this inflation and this inflation data makes, you know, the question is in people's minds now: will the Norwegian bank hike interest rates? So looking at the chart here, this is you can see that the euro Norwegian krona moved up to that pivot point, R1 pivot point, and then sold off down here. Now, where would I expect price not to go if the Norwegian krona is going to continue losing value? I wouldn't expect it to go below that S1 support zone. So, you know, when I was looking at that, I was potentially looking at a weakness in the Norwegian krone to carry on. Then, you know, a stop level for me would be underneath around this 9.72 level on this level here. So I could easily see price falling back down, testing and moving back up either to the R1 level and potentially the R2 level. The R1 target would be my first target there. So, you know, that could be potentially a potential place to look for euro Norwegian krone long. But what you have to remember is this is the last press release from the Norges Bank, and what they've said is that this was going from the last release. They said the executive board's current assessment of the outlook and balance of risk suggests that the policy rate will most likely be raised in June. Okay, so that's the big question right now for the Norwegian krone, is will it be raised in June? Okay, so that's what folks are looking at there. They're looking for a June rate hike out of Norwegian Bank. But the data point today raises question marks. Will they actually hike or won't they? Okay, so sometimes you've got to balance these different stories against one another. Okay, other big news out of the UK is we have the UK trying to choose a new Prime Minister. Okay, so I just want to run through with you how a new Prime Minister is elected. Theresa May stepped down from the Conservative Party. Okay, so there isn't going to be a general election, and a general election is when you're voting on all the different parties within the UK. No, the Conservative coalition government is in power, but Theresa May has stepped down as a Conservative leader. So what that will mean is that potentially there will be a new leader shortly. Well, there certainly will be, but who is that going to be is the question. So the way it's organised is this: candidates are put forward, and that's what's happening at the moment. Okay, all the candidates have been put forward to be the new Tory Prime Minister, and there's something like 10 or 11 of them. Now, at that first kind of introduction, each candidate needs 8 MPs that back them. And that first round, Conservative MPs receiving fewer than 17 votes are eliminated. Okay, so the first round, there's a vote, and anyone who gets less than 17 votes are eliminated from the race. The second round, anyone getting less than 33 votes are eliminated. And then if all candidates exceed this, the person with the fewest votes is eliminated, and the process continues until only 2 remain, and then there's a postal vote of the wider Conservative Party. The winner becomes party leader and Prime Minister. Okay, so that is how the process is going to work. At the moment, all the candidates are introducing themselves, and if you look on the BBC website, what you can see is that a number of different MPs, Conservative MPs, are making their case for being the new Tory Prime Minister. And you can have a look and you can see, the media is kind of awash at the moment with all these kinds of stories going on. The Conservative leadership, the contest timeline is as follows. So we've had the candidates confirmed, and we have the first ballot on the 13th of June. Okay, so that's this thing here. So this is happening on Thursday. And then we've got the successive ballots, 18th to 20th of June, until we get only 2 remain. And then 22nd of June, you get the postal ballot of party members. But a new leader is going to be expected to be announced this week on the 22nd of July. So we are looking at about 5 weeks, 6 weeks until the new Conservative Prime Minister is elected, and they're all saying different things. So you want to really get into the detail of who's saying what. Now, here's the current front runners. So at the moment, we've got Boris Johnson is the far and away leader. Okay, and then we've got Hunt, Leadsom, and Gove. So Boris Johnson at the moment is set to become the Conservative Prime Minister. He's really, miles and miles away in the polls, and he is determined to deliver a Brexit for Britain by the 31st of October. That is the new kind of date when people have to be, Britain has to leave the EU. And Boris Johnson is determined that that is the date, that there's no circumstances under which it can carry on any later than the 31st of October. So the harder the timescale is, the higher the chance of a hard Brexit. So, you know, this is hard for, you know, the UK potentially. This could be quite negative for the pound. So in the back of people's minds, if Johnson gets in as the Prime Minister for the Conservative Party, then that's more negative sentiment for the pound. Just something to be aware of. But again, that's the timeline. So if you want to take a screenshot of that, or come back and look, you can look at these details. I've got these from the BBC, and the BBC is a very good website for British politics, particularly if you want to know processes, what's happening, you know, what's the time scale. The BBC are very good at giving that information. So if you missed this here, you can just go to the bbc.co.uk and look under politics. And if you can't get it in your country, because I know you can't always get access in different countries, just come back and screenshot this. It just helps to make it clear. And that's the bookmakers front runners. You guys want to, again, just draw people's attention to the US dollar Swiss franc. You know, seasonally, the US dollar Swiss franc has fallen in 10 of the last 12 years in June. So just to be aware of that. And if US yields keep falling, if Fed cuts interest rates, if there's an increase in flight to safety, then US dollar Swiss franc will be set to fall. So, you know, US dollar Swiss franc at the moment is set for another fall this month, and the fundamentals are quite strong for that to carry on. So I just want to draw that to your attention. Now we want to look at the week ahead. Okay, now we've had some core PPI data out of the US, and the data point was a miss, and if producer prices are a miss, then that's going to mean we're potentially going to have low inflation. Now, low inflation data is out tomorrow. And if inflation data keeps getting low, then the Federal Reserve will be under pressure to decrease interest rates. So that's just something to be aware of, okay? And I saw a tweet from Donald Trump, who essentially was saying, you know, inflation is low, brilliant, that's what we want. We want really low inflation. So it's just, you know, to be aware of. Sometimes Donald Trump does give a hint of what's happening before it does happen. So I was just interesting to hear him tweeting about low inflation. He could be referring to the producer price index numbers, of course. But I just wanted you to be aware of that information. But this data point tomorrow is going to be really key for the US dollar. So if we get a weak number here, then expect to see US dollar selling. That's going to be because the interest rate cut narrative from the Federal Reserve is going to go back into the front of people's minds. So big data point tomorrow, 12:30 p.m. GMT time on Wednesday. That is going to be a very important data point for the US, as is retail sales on Friday. So they're the two big data points coming out for the US. On Thursday, we have another important data point, which is the employment change and unemployment rate data for Australia. Now, the Reserve Bank of Australia cut interest rates for the first time since 2016 at their last rate meeting. And during that time, they once again highlighted the importance of their labour data. Labour data has been a bright spot for the Australian economy. So if we see this employment numbers you know, really disappointing, then we're going to see some Australian dollar selling. And the reason is because the market will be pricing in further interest rates coming up during the year. All right, so just to be aware of that, this has a disproportionately important emphasis. It's 1:30 a.m. GMT time. See big. Now, what you're looking for, you'd be looking for employment change and unemployment rate. Okay, if the unemployment rate goes higher, above, you know, 5.3%, and the employment change is, you know, below 16,000, then you're going to see some Australian dollar selling. And with the employment change, you just need to drill down to the numbers, because we're looking at full-time employment is obviously better than part-time employment. So again, those details can be important when the release actually happens. But headline unemployment rate, we want to see a fall in unemployment rate and a rise in employment change for positive Australian dollar. Otherwise, we want to see a fall in employment change and a rise in unemployment rate for negative Australian dollar. Thursday, we also have the Swiss Bank Monetary Policy Assessment. Just to be aware that the Swiss can get quite concerned about the strength of the Swiss franc. So the rate's expected to stay as it is negative territory, minus 0.75%, but look out for any comments about, that the Swiss National Bank is ready to intervene in FX currency prices. Look for that. That will see some Swiss franc weakness on the headline if that does occur. Friday is the core retail sales out of the US, and we also have some industrial production, some data out of China as well, which again will be viewed to see, is that industrial production falling? Is it still low? So again, that's always been carefully viewed as a key indicator for a slowdown in global growth. And we've got Mark Carney speaking on Friday, but I'm not expecting anything other than the usual from Mark Carney. We can see European session, the currency pairs were quite flat. European major indices were up. DAX, France, UK's FTSE, Spain's IBEX, Italy's FTSE all up, with the DAX up 1%, Italy's FTSE nearly up 1%. 10-year yields up at the start of the American session and the European session. Gold down, oil up, Bitcoin down 2%. So for the mood going forward, we want to look at the path of yields, and we want to look at the path of the equities. So just going to my other screen, I'll just have a quick look where we're at. Yeah, we got S&P 500 is up 0.62%, S&P 500 is up 0.5%, Nasdaq's up 0.77%, and the US 10-year yields are just fractionally up at 0.24%, and the 5 years are up at 0.60%. So there's still some, confidence in the market. But I think what I'm trying to say really is, I think this confidence is fragile. There's a lot of risk still in the market, and risk appetite has returned. The question is, how long will it return? Yeah, and the Fed looking at a cut is giving US investors a bit more confidence as well, which is why we're seeing some strength in the stock market, and that's why central banks around the world are moving to an easing bias. So investors are getting more confident again in investing in US stocks. There's just a quick look at some of the key data we've looked at. So looking forward, we want to, obviously, key market events. We've looked forward. We've seen the anticipated events coming up. We've got US inflation on Wednesday. We've got Australians employment data on Thursday. We've got US retail sales on Friday. They're the key events that are coming up. Developing a bias for certain currencies based on your sentiment analysis. I think it's a very mixed picture at the moment. So we have seen some pound strength today because of the good average hour weekly earnings, but that's not enough to make me a buyer of the pound. So for me, I think sentiment is quite mixed and is quite at a crossroads. I'm not convinced by the strength we're seeing in the US dollar, and I'm waiting on the inflation data out tomorrow to get more of a direction for the US dollar. How does the sentiment marry the fundamental outlook for currency? I think we looked at that with the pound, and we can see that the pound rallied, but the pound US dollar could still be under pressure for this session. So, potentially a pound US dollar, potential short, but I'm not convinced, if I'm honest. But that's, we looked at that one technical setup. I think now we'll look at the how to find places of value to trade from. Sometimes the market's more easy to understand than others. I think we're at a crossroads, but this is a very good point. How to find places of value to trade from is when you have identified your currency pair to trade, you don't just want to jump in at any place. And that's really important because many professional traders have learned through discipline to enter at places of value. So if you just jump into a currency pair, the chances are that the price is going to move against you, because the professional traders and institutions are often only going to enter when it gets to a place of value. Now, the key sort of concept behind this is, imagine that you wanted to buy a new car. Okay, say you knew to yourself, you know what, I've looked at the market and I've seen that I really want to buy a brand new Toyota. Okay, now once you've decided which car you want to buy, you would never, or it'd be very unusual rather, for someone just to go and buy the first Toyota car that they saw from the first place. Okay, no, if you want to buy a car, you'd think, well, let me look around to see who sells Toyota cars. I want to look at the best deal. You may think, well, I want to look at when's the best time of year to buy a Toyota car. Are some times of the year better than others to buy? What is the average price throughout the year of a Toyota car? And then when you actually come to purchase it, you will try to buy the Toyota car for the best possible price you can. You won't just go and automatically buy it, because what's the risk if you automatically buy the Toyota car is that you pay too much, okay? And no one wants to pay too much for something. You don't want to just go and buy and pay $2,000 more for a car than you needed to, okay? So it's exactly the same way when you're trading. You don't want to go and risk too much. You don't want to just go and buy a currency pair at the first price you see, because you may end up paying the wrong price. You want to look at a place of value. Now, one of the things that helps me to find a place of value is pivot points. I think they're really, really helpful. And I'm just going to show you some pivot points here. And I'm going to look at the New Zealand US dollar chart. Okay, I'm just going to calling it up, and then I'll show you. Now, here we go. Okay, so this is a trade that I'm looking at the moment. Let me just right, here we go. Right, now this is, I'll explain the rationale for this. Okay, now we had some US dollar weakness on the very weak non-farm payrolls. Okay, so here you can see 7th of June, very weak non-farm payrolls. The speculation was increasing that the Federal Reserve is going to cut interest rates. So what we were seeing some key US dollar weakness. Okay, so that key US dollar weakness resulted in the New Zealand US dollar pair increasing. Now we can see that price moved above that pivot point. Now I've just entered a long on the New Zealand US dollar pair. That's what I was doing just after the PPI data has come out. We've had the comment from Trump on potential low inflation being good. And so I can see a real good place for me to enter is just around this pivot point here. And I can just put my stops below here. Okay, so it's a very good value place to enter, with a potential target at the first target of the resistance point above. Now you see what I'm looking for is I'm looking for a place of value, okay? And this is that place of value here, okay? And I can see that, you know, that is a good place to enter. I can have a nice tight stop below there, and that gives me enough room for the trade to breathe as well, okay? So you see, if you entered here, which you could have entered here, see the place where you'd want your stop, you would want your stop below the pivot point here. But it's better, isn't it, if you can get to a place of value. You can see, look, a horizontal support level, support became resistance, through here support again. We've just fallen down to that natural support level, also a pivot point. That is an obvious place of value there, and potentially another place of value is here. So if price moves back down here, and then price moves back down towards this support level, if I wanted to enter in along again, I could, and I could just put my stop below this support level here, okay? So that's what you're wanting to do, is look for a place where you can get good value, okay? Similarly, on the Euro NOK chart, you can see that selling from these levels when the Norwegian krone was potentially going to be raised was a sensible place to sell from down to these pivot points. Okay. That's all that we've got time for today. Remember, this workshop takes place every week, so we will be back again same time. Or I won't be back next week because I'm glad I remembered. Next week, Monday and Tuesday, I'm away in Dubai running a training course for traders who would like FX traders. So I won't be around next week, but I will be back the week after. And remember this offer that we have at HYCM, that if deposit $1,500, you get a 1 hour coaching session with me, $3,000, 1 hour session and a 1 hour follow-up review, $10,000, 2 hour session with me, 1 hour follow-up review, 1 week BO support with myself. This isn't money that you pay, this is money that you deposit into your own account. So just make sure that you're aware of that. That's not what's happening, that is your money. But when you deposit it, you just get those extra add-ons as an incentive from HYCM, and their desire to help traders trade well, or successful traders or long-term traders, and that's a win-win for everyone. Okay, guys, thank you very much for attending the online trading workshop today. Yeah, thank you very much, Nadir. Have a really good, yeah, thank you. I hope to have a good trip as well. You guys all have a good week. Thanks, Dia. Thanks, Nadir. Thanks, Tribhuvan. Yeah, I'm glad you've enjoyed it. Yeah, thanks, guys. I think the thing to be aware of at the market at the moment is a little look for that US data tomorrow, that core inflation data. That's going to be really interesting. I think if we really start to get a fall in that core inflation data, just see which narrative becomes stronger. I'm expecting the Federal Reserve rate cuts become the stronger narrative. But you'll have to be analyzing that as it goes ahead. Look on a good website, forexlive.com, you know, CNBC, Action Forex, something like that, and you'll get, you know, some really good analysis from those guys. All right, guys, you have a good time, and I hope to see you in 2 weeks' time. Thank you now. Bye.